Thank you, everyone, and thanks for staying to listen to what we have to say. At Mesh, we've built a digital smart asset ecosystem, and we manage both sides of that market. So issuers who are looking to raise capital and or list any form of real-world asset in a tokenized form, we facilitate that, including the life cycle or the full life cycle management of that asset. And then we take curated alternative assets and match them to investors based on the fact that those investors can't access those investments easily or if ever. And one of those examples would be private credit, for example.
That's pretty cool.
We try.
Tobie, your turn.
My name is Tobie from Spuy. So at Block Markets Africa, we're now open financial market infrastructure, by the way. We build open financial market infrastructure. What it really is smarter transaction systems. So what we figured out is that if you look at the great tech that's making stablecoins so successful today, and you add regulatory, legal, and monetary policy frameworks to that tech, you can actually create something called a digital equivalent of legal tender. And that means that your normal currency can just operate as a token. So this kind of infrastructure, we think, can change the lives of many, many people on our continent, because we think it enables non-bank savings and payments. And that's a really important concept, because right now, if you want to do savings or payments, you've got to have a banking relationship. And many times, many banks don't have the capacity to help you do that. And many times the banks don't want you to do that because they see it as a competition. So it's critically important for the uptake of this technology in the continent that we can do non-bank savings and payments, and that's what we do with a lot of really exciting fintechs, like Sean.
Yeah, we use their infrastructure. They charge us too much. We pay them too little. They complain. That's how it works. So yeah, from our point of view, I'm Sean Emery. I'm the CEO of RainFin. We are singularly focused on tokenization. I think that we're going to tokenize everything. I believe fundamentally that the financial ecosystem as we have it is desperately broken. I really hope that blockchain and tokenization can turn the industry quite substantially on its head. And I love this topic of this conversation being, Africa's economic potential. And I think that Africa has been, specifically people in Africa, have been excluded from the ability to access proper financial product around the world, and through tokenization we can definitely do that, through fragmentation, through programmability, through free wallets, and there's a whole range of things that we can do, but you can't do any of that until you have real world assets on chain that you can actually utilize inside these great and fantastic infrastructures. We see ourselves as an enabler of bringing these real world products on chain so that we can unleash all of this potential that blockchain has for us.
Thanks, Sean. Staying with you for a second, what kind of surprises or specific lessons have you learned from building what you're doing? I won't say building RainFin, because RainFin's been around for a while and has pivoted a bit. But from building what you've done, what are the kind of lessons that you could maybe share with the rest of us?
Yes, the fundamental lesson is just because it's tokenized doesn't mean people buy it. Okay. So you do have to, when you go through this space, very much focus on understanding what the new utility is that you are unlocking. And if you can focus on that, like what is the problem you're actually solving? And you can tokenize an asset. So I think tokenized gold has been a wonderful example. Tokenized US dollar treasury bills being stablecoin is a wonderful example. Tokenized, yes, private credit, tokenized stocks, those are all things. But effectively, as long as you can understand what the new utility you're unlocking by tokenization, then there's going to be a business there. But the other horrible surprise, expensive surprise, is tokenize something and no one buys it. Yeah.
I guess you've got different markets in terms of inclusion. So accessing some otherwise unlisted assets is inclusion for rich people. Accessing T-bills is inclusion for everybody, maybe. Rob, what about the kind of lessons you've learned in Mesh?
Well, firstly, surprises are an everyday thing for me, because Connie saved me from banking about a year ago. So the whole world remains very surprising every single day. But from a learnings point of view, the one is that there's a misconception that stable coins are only limited to cash and cash-backed tokens, which is a big learning. So for instance, there are gold stable coins, there are other assets that back stablecoins on a one-to-one basis. So that's quite a big learning. The amount of time that is taken up in my life to dissuade people that Reg 28 and Board Notice 90 and the regulatory framework is insurmountable has been a large learning and an everyday surprise. And the other thing is that, and now I've gone blank because I've just dissed the regulator and I feel like I shouldn't be doing that as the KI of our business. So I'll leave it there as a learning.
Well, you brought up regulation, and it's a topic obviously we've returned to several times during the day. Tobie, you've been working with the regulator since PK2, I think, in whenever that was, 2021. So from that perspective, what have you learned in that process of engaging with the regulator? Because I think it's something that's many people in this room are either doing or have it in their future to be engaging with regulators. What advice can you give them on that front?
Well, I think the surprising thing is that there is a true sense of collaboration available at the regulator if you are able to go in and open up and engage. I think a lot of people approach the regulator with a business idea that unfortunately isn't well thought through, and then they get a no from the regulator, and then it's the regulator's fault. I think the serious businesses in the country that have real business plans and real depth of liquidity and real customers and solving real problems, when they want to use new technology to do that, the regulator is actually a friend and a partner. I can really strongly suggest that you engage the IFWG, the Intergovernmental Financial Working Group. They have a number of tools that can support you. And I think what's the most surprising is that even though we're building non-bank savings and payments infrastructure, it's how much value that gives to the banks and how many banks actually see this as a massive opportunity for them to cut costs in your customer acquisition, to reduce fraud risk, to be able to create new access for non-residents that are just too high in terms of their compliance risk to be able to bank at the moment, and how this new technology is actually helping the biggest institutions to be able to be more efficient at what they do. I think so. The biggest surprise is that if you truly engage the regulator, you don't have to be their competition or their enemy. You can be their partner. And if you can do that, then I think that you can help solve real needs from real people in this country and the continent.
Yeah, I think that's true. And the thing that struck me is the regulators do actually know what they're talking about. I mean, we spent a longer time educating them between us and the people in this room, I'm sure. But they get it and they support it and they see value in it. And we're seeing it, as I spoke earlier on about, in the payments inclusion, payments modernization, that kind of stuff. And I think one of the benefits they see is this. You can use these tools to solve financial problems in new ways and give people things that they otherwise wouldn't have access to. With that, Sean, you read out the unlocking Africa's economic potential from a sort of African perspective, whatever that means. What are the sort of key things? Maybe Sean, you start with this. What are the sort of key things that you see in terms of unlocking Africa's potential in what you're doing?
So for me, the unlocking of a capital market is, I guess, the most important thing that I can see right now that happens in Africa. So, I mean, I don't know if any of you here have ever tried to raise a substantial amount of money in the capital market system of Africa. It's a very difficult exercise to go through. And one of the things that the tokenization and blockchain is giving for Africa specifically is an ability for an organization based in Africa or South Africa, let me use South Africa as an example now, an organization that is based here to really attract global capital extremely easily. And I think that the market has changed. We used to see that you would have to, as a company, go to a marketplace and hope that investors would come to that marketplace and you would be one of those there. What you can do now is you can tokenize any instrument you want. I'm not talking about, doesn't have to be your shares, doesn't have to be your bonds, doesn't have to be instruments which are very traditional. You can start tokenizing items which are slightly non-traditional financial markets infrastructure because you don't have to put what you tokenize on a financial markets infrastructure like the JSE. So you can tokenize reserves, you can tokenize intellectual property, you can tokenize a revenue stream, you can tokenize, Invoices. You can tokenize a whole range, thank you, yes. You can tokenize a whole range of things which before you were limited to do. So one thing, many, many more instruments. Secondly, you can literally directly access through just putting your token into different places like the Solana network or the Stellar network or these different wallet structures. There's suddenly these large pools of capital that are becoming available to you and are actually searching for great yield. There is a tremendous amount of international audience out there who wants to get African asset, but they can't go through our inefficient capital markets. So the consequence, I see a real significant change. There's still a marketing problem. In other words, my first point, just tokenize it, doesn't get bought. You still got to have a great product that people want, communicate through all of these social channels. I mean, there's some people in this audience here. I don't know if they are here right now. They might have left because we were so boring. But they have the ability to really promote projects on a global basis. Like, I mean, I can't tell you how many people through Discord and Twitter are investing into South African startup businesses through tokenization.
Yeah, and I think that there's a lot of stuff that we don't see that kind of goes under the radar that is happening. Tobie, from a money perspective, I know one of the challenges in Africa is access to dollars and spending money. I know you've been thinking a lot about that, and I know you've got conversations going on. I don't know how much you're able to say, but could you talk about the sort of African challenges around dollars and tokenization a little bit? I talked about dollarization earlier, but maybe there's ways you can enlighten us.
I'll keep that very brief because it's an exceptionally deep conversation. In short, the first thesis is that crypto for institutions in Africa is dollars because it's the same liquidity, it's foreign currency liquidity. So there's stress on institutional balance sheets in Africa and central banking and commercial banking balance sheets. So for them to be able to invest in crypto is very difficult because they need dollars. So there's a dearth of dollars for cross-border settlements. And the one thing that isn't obvious for everybody is that if you want to send money out of an African country to another African country, the only person who's going to give you dollars for your domestic currency is your commercial bank and your central bank. So if they don't have dollars, there's nobody to buy your domestic currency. And I've got sad news for you, nobody else wants your domestic currency. Nobody in any other country wants your domestic currency. So this creates this massive road-blocking effect in intra-Africa trade. The ability to tokenize, though, creates this really different perspective because if you I'm not going to talk about IMF structures and the ability to create credit between banks, but the reality is that there is a much more efficient way of moving liabilities between each other using the blockchain. And it's not the SWIFT system that's broken. Guys, SWIFT is fantastic. SWIFT is super fast. But if you're an FATF grey-listed country, then SWIFT doesn't do automatic stuff for you. Because you have to get dollars, which means a Washington bank sees a transaction from an African grey-listed country and has to do a manual compliance review on that transaction. And that's only the first half. Because then from Washington, those dollars have to go to the other African country, and that's also a manual verification process because that country is also grey-listed. And that's why 2 to 6 business days is the norm. And the costs involved is massive. And there's no liquidity between African currencies to swap direct. So there's some really exciting things happening in this space. Most exciting, I think, is that the African bankers came back from the BIS and they were told to talk to crypto and stablecoin companies for cross-border payments. So I think there's really exciting movement there.
Can I just hop in there quickly?
Please.
So there are 2 kind of semi-live case studies that we've been talking to people about that kind of mirror and fit into that. The one is for one of the really, really large banks is for their interjurisdictional settlements process, for their on-balance sheet internal settlements that they require to look at either just simply a blockchain ledger system and or an internalized stablecoin environment where they don't have to worry about the jurisdictional constraints on the currency. So you don't have to worry about shillings and naira, and you can just do it internally and settle on your journal. And the other one is we're talking to one of the very large, very old, kind of South African-based, used to be all over, but they did some bad things, asset managers, and they're looking from an African point of view to be able to make available their funds across jurisdiction in Africa alone, so excluding us, where they can't get access to certain products. So one country has the best performing bond fund on the continent. The other country in the same asset manager has probably the best commodity-based fund. But because of the currency constraints, they can't get hold of those units in those funds and cannot get access to those exchanges. So what we are looking to do and help them do is set up an isolated marketplace for themselves to be able to transact between themselves and settle and access and purchase units so that their clients on continent can get access to investment products that they really need and really want as part of their retirement savings.
Yeah, I mean, the challenge is that you start with something that doesn't recognize borders, and then you try and impose the borders on it sort of after the fact.
Well, hopefully we just don't, and then it's okay.
Well, that kind of leads me to the last question I've got. I'm also looking at the clock that Sean's got there. Well, I think we've got a bit of time beyond that. What does the end game look like? I don't think there is an end game really, so it's a daft question in some respects. But when I talked about PayInc earlier, there's a end picture where the payment system is fully tokenized. There's interim stages where we've sort of plugged in stablecoins, or where we've tokenized this bit but not that bit, and there's kind of a lot of steps to get there, and they're unclear at this point. But what is an ideal kind of leapfrog version of financial services across Africa look like? If I think of leapfrog, I think about how Africa leapfrogged to mobile and avoided the hassle of building landlines and laying cables and that kind of stuff, and just put up cell phone towers, creating a better system. We've got the opportunity to create a better capital markets and a better payment system across Africa with the kind of tools that you guys are building. What does that look like? How does that satisfy better the demands that are eternal for financial needs of real people and businesses? Who wants to take that first? Volunteers. Sean.
So, this guy is one of the smartest people that I've ever met, okay? But I don't let him talk for more than 3 minutes because I get confused. So I ask him to summarize all of his stuff. But effectively, I think we're going to see a complete rewiring of the current account. I think effectively, we're going to have, if we could just fast forward, instead of a telephone, and you said a mobile device, I hope that everybody globally would get a blockchain wallet that they had. It was their wallet, and they controlled their destiny. There was a statement before when the banking panel, where banks still going to control it. I don't think so. I think people are going to control their own wealth. And if I could do that, then people can have access to their own wallets, and they can access any financial product on a global basis from their wallets. And that ultimately is, I think, where we're going to go very, very fast, right, from an infrastructure point of view. But you've got a better answer, so I'll leave you the time.
I'll go last.
Okay, you can go last. So, to Sean's point, that's how our infrastructure is built. Every client that signs up to Mesh has their own wallet. It's decentralized. You can hold all of those assets. You don't even have to go through Mesh. You can go through any one of the chains that you've accessed, that you've signed up for that wallet on, and you can see all of those assets, which means across the continent, you can utilize existing frameworks, existing infrastructure to access your wealth, your investments, your money. I'm probably a little bit less bullish about how far forward we have to look in terms of leapfrogging, because there are so many enormous and immediate problems to solve right now that we could solve today and in the next 3 or 4 years, that we don't have to be as kind of forward-thinking space trek-like as you thinking of. I think we've got bigger issues to solve a lot quicker, and we can do that now, and I think we should concentrate on doing that now.
The interim stages have to work, and that's kind of what we're doing now. Tobie, you've got 2 seconds according to the clock, but go for it.
There's already 15 really big non-bank institutions in the US that's applied for banking charters, or stablecoins. Okay, so I think if you ask me what the end game is, it can't be wallets for everybody because that's already happening. It can't be tokens as payments because that's already happening. So I think it's a leveling of the playing field. I think it's the fact that small and enterprise scale businesses will have access to the same capital market opportunities, the same raising opportunities, that the smallest unemployed individual will be able to invest equally with the highest net worth individual. It'll be that an African grey-listed country can compete on global markets for finance and transactions equal to anybody else, and that the idea that one entity can dictate sanctions and how much contracts and transactions you can do between you and your neighbors may become a thing of the past. But I think there's a lot of excitement in the future, and I think that it just boils down to meeting more simple, practical human needs. And I think that the technology is already here today.
Yeah, and I think that convergence story is fascinating. Is sort of Robinhood versus Coinbase versus Nasdaq. Where does that end up? We're already in a world where you've got Coinbase and Mastercard competing for BVNK. We hear, so fascinating. Guys, thanks very much. We've got time, I think, for some questions. I'm looking to Chipo.
Depending on how the panel answers, if they're long and winded.
Probably one question. Make it a
So
good
for
one.
Sean and I, we can take probably 8 or 9 questions.
Tobie might just take one.
I couldn't help.
We have a question in the front.
For me, it's so simple. You have the Bitcoin blockchain already there. It's a much better store of value than dollar or rand. It has the transactional rails. It allows for capitalization formation of your African markets at root. So just get it adopted at root level. And what happens is you automatically clean up centralized government because it's on the public blockchain. No one can take, because if you break it down to first principles, it's a store of value, it's a store of labor, your lifelong labor. And the problem that you've had as an African is you go and invest it in rands or you go and invest it in dollars. And as you've pointed out, it's a 98% devaluation. It's an asset strip of African capital formation. What happens is you go and you put the blockchain with a payment rail that's already there, and it's the best saving mechanism yet that we've come up with. And that's the best form of African capital market formation that you can have.
I think you're preaching to the choir, but I don't think that was a question.
I was going to say, is that a question or an
thanks
answer?
anyway. No, I don't
So
think
that was not a
anybody disagreed.
question.
No, that's great.
Okay.
That's great. Thank you.
Anyone else have an opinion on what he just said?
Go for it.
Tobie
Yeah, I
has.
mean, I have a
Sean, you're being a
very...
bully. Tobie, put his hand up first. Look at him, look at him.
There's a really strong school of thought that says that instead of being dollarized, you can be cryptoized. And I think the argument makes sense in a lot of ways. Where it falls down, unfortunately, is monetary sovereignty and policy transmission stuff for regulators and for central banks, and the ability to create liquidity that pushbacks into that banking system to lend out. Now, the reason why I started with it, a lot of it makes sense, is that if you could get past those, the invariable growth in an anti-inflation instrument, right, could just create enough yield over time or valuation over time to do this. But it's not something that the market can digest. So the reality is that money systems are controlled by regulators and commercial and central banks, and you have to work with them if you want to take a product to the person in the market, because it's their payment system.
Sean?
You can't create lending. So your model doesn't work. I mean, we can have this argument for nth. I've had this with Stafford continuously. Mortgages, loans, and structures are created through regulated instruments in banks who protect depositors.
Yeah.
How do you get leverage if you just run on the Bitcoin network? So where does the capital come from to grow an economy?
So I won't allow this to continue. This can happen somewhere else. I will not allow this to happen in this room right now. All right, excellent. Thank you so much, gentlemen. Sean, I thought you-